video coming to you live here from northern Israel, uh, talking about Bitcoin and alts and the market, which is currently doing some very interesting things. And if you look at the weekly time frame, the new weekly time frames for Bitcoin and alts, you'll see like yes, um, you'll see some very interesting forecasts. Especially if you look at Bitcoin, it is still well within range of making moves following the most recent intersects of the power mean and the RMLRs. And likewise, if you look at other assets, you'll see that there's also been a bunch of nice intersects last week that it's within range of making nice moves this week. So that's why it's very probable that we will see some very nice moves this week on the markets in general, and it could easily be early in the week. I wouldn't be surprised to see some early market action moving the coins very nice relative to their time frame. And if you look at the probabilities, there definitely are probabilities to the upside and the downside. As always, at the moment, there's a lot of probabilities look at the upside. That does not mean that it can't go back down, obviously. It's just, if you look at the volatility and correlation, if you look at the variance correlation, if you look at the entry and correlation across many different time frames, of course, you'll see if you look at all the different time frames, there's a mix, of course. Some time frames will say higher, sometimes we'll say lower. But overall, right now, the propensity for the week is looking to the upside. Now, of course, that can change, and that's why we look at low time frames, right? That's why we look at low time frame probabilities, because that's where the changes happen. Speaking of things that change quickly in volatile assets, if you've looked at like meme coins, right? Look at, for example, Bonk, great example of a coin that went up like more than 30% or something from the low to the high on Friday. Between Friday and early Saturday on the daily, candles, like in an 8-hour period or something like that, it went up. It was even less than 8 hours, maybe 5 or 6 hours. It went up like 33% or something crazy. That's a very big move for a meme coin, right? Especially one that's been around for, I don't know, a year or something like that, maybe 2 years, whatever. Not a long time, but in meme coin land, usually those kind of crazy pumps where you get 30%, 50%, 100%, 500%, usually those kind of crazy moves happen relatively early on or much, much later on when people, like after it's dumped and gone to nothing and stayed there for years and then eventually it comes back, then you get like suddenly crazy action pumping it back into existence, right? Well, that's not the case in Bonk's case. It's just actively trading like Bonkers on a regular basis, like a lot of coins are, by the way. Yeah, many meme coins. I don't know why I mention that one a lot. Probably because I traded allegedly. It does trade very nicely in that it has a fair amount of liquidity, depending on what exchange you're using it on. It definitely does not have good liquidity on some exchanges. So you have to be careful where you trade that thing, because the charts can be quite bad. Like, okay, the chart on the actual exchange itself might look one way, but like if you look at their actual trading view chart, it can actually look quite terrible. And it can be quite gappy between a lot of different candles, even like on the 30-second or the 1 minute time frame, right? So it's not always giving you good information, right? Even if you have all the VEPS tools loaded up. But anyway, it's very tradable if you trade it on the right exchanges. And it's very volatile And does it follow the VEPs? Yeah, it follows the VEPs very nicely. Does it have a particular way of tending to move? Well, look, it's random, like all assets. Does it do certain things in relation to the VEPs? Yeah, it does. It has tendencies, like all assets. It has tendencies, right? And some assets tend to adhere to the VEPs in certain ways, and some assets tend to adhere to the VEPs in other ways, right? And there are definitely things about Bonk that you can say it sticks to the kind of normative expectations very well, and then there are obviously things about Bonk that you can say it does those things not according to the normative way on a regular basis. But again, it's random. You can't trade. You're not trading patterns about it. I'm just saying, in terms of its tendencies and what it tends to do, right? It is very explosive to the upside and to the downside. And for example, on Friday and early Saturday, when it made that nice big move to the upside, well, it was setting up mean reversions. Obviously, when your price shoots 30% to the upside in a matter of 5 hours, you're obviously going to be breaking through, at least some third bands to the upside of various RMLRs. Like, that's not even a question. So when that happens, that's going to cause massive amounts of mean reversions to be set up, right? And what happened pretty much all day Saturday and Sunday? Mean reversions, right? All the way up to the 4 hour, right? Very nicely. All the way down from the 1 second all the way up to the 4 hour. There were mean reversions happening. And the one from on the 4 hour, I remember being in a little voice chat thing in the Alpha Trading Discord with one of our fellow Discord members, literally on Saturday, talking to him about the likely time that we would see the mean reversion complete. Literally, I said to him, this was like Saturday morning my time. I said, it's probable that we'll see by Sunday, afternoon, my time, Israel time. Sometimes Sunday afternoon, maybe evening, but probably by Sunday afternoon, we'll see the mean reversion on the 4 hour complete. It's probable. It doesn't have to be. It could keep running up like crazy, right? Or it could just complete the mean reversion extremely slowly at a slightly different slope. A lot of things are probable, but in fact, the probability was that it would complete yesterday at around early afternoon Israel time. And yesterday, early afternoon Israel time, I happened to see that same person in the Discord again. I was talking with him again, and literally as we're talking, early afternoon Israel time, the like early morning, like 8 a.m. or something like that, U.S. Eastern time, U.S. Eastern time. The asset completed the mean reversion on the 4 hour, like perfectly, exactly at the start of the new 4 hour, right? So on cue, how did I know that would happen? Again, I didn't read it from a crystal ball, right? I looked at the probabilities based on the RMLR indicator, which shows us very accurately the likely direction of the future RMLR. And we know when an asset is in mean reversion and when it's in distribution, right? We could see it very clearly. So it was clearly in mean reversion after smacking all those bands to the upside on Friday. And then Saturday, once it stopped hitting those bands for a couple of candles, it began the long, slow process of mean reversion. And it took about, 7 candles, 6 candles, 7 candles to complete, which is not a long time, really, on a 4 hour necessarily, especially on the weekend, right? So it happened basically in like a day and a half, barely. Pretty impressive. right? And if you were trading it, let's say you missed all that huge action to the upside, which is entirely possible, right? I was busy Friday with things, personal stuff. So like Friday afternoon, Friday evening, whatever. After the live stream, a couple hours after the live stream, I was quite busy, and for the rest of the day, so I missed that big pump. Oh no, I missed the 30% pump. Yes, so what? You know, you know what I didn't miss? The mean reversions. Oh, but their gains weren't as huge. Like, if that's your thinking, you got issues, right? You got issues that I'm not sure anyone can help you with, because you're always going to have moves you're going to miss and moves you're going to make and catch when you're trading. That's the nature of trading, right? You're always going to have, statistically speaking, more moves that you're going to miss than moves you're going to get. That's just the nature of trading. This is the nature of nature. Flowers and rocks, but mostly flowers. Look at those flowers. There you go. We're talking daisies and these little purple. They're not EOD no dead, I don't think, but they're similar. Or they're not too dissimilar. Anyway, there's a blue flower called the Wandering Jew, EOD no dead, which goes. I don't think that's them. They have more like a bell shape, but it doesn't really matter. It's a very popular weed that grows around Israel and in other places on Earth, and that's kind of why it has that name. Anyway, so yeah, so Bonk, for example, a great asset to trade if you like scalping low time frames, and you're careful and you're not crazy by using insane volatility, because it can definitely move very fast amounts, and if it goes the wrong way against you and you happen to be over leveraged, that can hurt very quickly. And then the mistake is, let's say you're, I don't know, 5x leverage, 10x, or something crazy like 20x or higher, okay? Doesn't even matter, okay? If it goes against you a little, and it probably will at some point, then you think to yourself, oh, it'll come back. Well, it might come back. Maybe you're reading the probabilities right, and it will eventually come back. But how long until it does, right? And then you're like, yeah, but I really don't want to lose $1 or $20 or $100 or $1,000, right? Just because I was wrong for a second. Like, what if it comes back the second I get out of the trade? Well, here's the thing: would you rather lose that tiny little amount at the beginning of your trade than watch it get progressively worse and worse and worse, and maybe lose a big chunk of your trading stash, maybe even an actual fortune, right? So that's why it's better to rip the Band-Aid off early when it's relatively pain-free than to sit there and let it get worse and worse before you actually take action and do something about it. Because if you do that, if you let it sit there and get worse, it can get really painful, and that's ultimately how people get wrecked, because they convince themselves that it will go back in their favor, and when it doesn't, well, we all know what happens then. You get that letter from the exchange that says, dear client, we regret to inform you that your position has been liquidated. And then they might even, depending on if you had enough funds in your account, right, they might require you to pay them for the privilege of getting wrecked. Right? You might need to pay them some closing fees or something. That happens quite regularly to settle up the debt, right? Especially if you do something insane like use cross as opposed to isolated trades, right? So that's why we definitely recommend not using leverage. If you cannot use leverage, don't use leverage. There's really no reason to use it. I mean, to be honest, if how do I put it? I know there are exceptions to the rule. There are exceptions to the rule. I get it. There are times when you feel like, no, I need to use it now because I see an opportunity. But like, if you feel like I need to use it now because I need to make X amount more money immediately, you're probably going to regret that decision. Because when you're under stress, you're probably not going to trade well. Right? It's not a thing. It's not a task for the overly stressed. It really isn't. And if you're doing it in that context, you're probably going to regret it. Yeah, it's a task. It's the kind of thing you should do when you're not overly stressed. Now, I understand there's some people who acquire the skill of trading and then other things go wrong in their life, not necessarily in trading, but other things happen in life. Maybe they lose their job, maybe they lose their, who knows what, their house, their car, their wife, their kids, their bicycle, their dog runs away, everything goes bad. I don't know what. But they still have trading. Well, if you still have enough trading capital to trade in that context and you're still able to trade calmly without being too stressed about all the terrible things that God has thrown at you or the universe has thrown at you or life has thrown at you, well, congratulations. Maybe you can keep doing it stress-free, relatively, like during the trading session. You might still have all those stresses when you're not trading, but while you're trading, you should be able to compartmentalize and not feel stressed. Because if you're feeling stressed while you're trading, you're doing it wrong, right? You should trade like you should trade in your head, like every Satoshi counts and that they all matter, but that you are better off ripping off a Band-Aid than letting an injury get worse before you treat it. If that makes sense. And how do you do that? You do that by limiting your losses. So if you're in a low time frame trade, again, preferably no leverage, right? Using only the capital that you can actually afford to lose. The moment it goes against you, just get out of the trade. Just get out. Like, say you're trading the 3-minute time frame and a 3-minute candle goes against you. Just get out. Why? It only went against me 0.002%. Why should I get out of the trade? It's basically flat. Listen, it's up to you to decide, ultimately. But you should be entering trades pretty much right when they're about to move in your favor. If they don't move in your favor, pretty much right when you enter, and the process takes a long time before it starts to move, it's probably not going to go in your favor. You're better off getting out of the trade, losing a few pennies or a few dollars, right? Whatever your position size is, doesn't matter. You're better off getting out, losing a tiny amount, and waiting for the next occurrence of opportunity. You want to enter the trade right before it makes the move. You don't want to be chasing the trade when it's already making the move. You want to get in the trade before it makes the move, but not too long before it makes the move. Because if you get in too long before it makes the move, guess what? The probabilities are it will go against you. It will go against you. That's just the probabilities. There's nothing you can do about it. There's just nothing you can do about it. Anyway, guys, that's going to do it for now. I'll call you back with another video. I'll call you back, like a phone call. I'll call you back with another video. Is that what we say now on YouTube? I'll call you back. I think that's what we say now on YouTube. I look forward to seeing you guys again. I look forward to talking into the cyber void again and seeing your comments and getting your DMs about it. Hey, Yasho, you said that the market was going to go up this week, but it didn't. No, I said the probabilities are looking good to the upside. Because they are. All right? Okay. That's going to do it for now. Take care. Peace.